The European calendar will be rife with economic updates in the week ahead, including industrial production, inflation, trade figures, and several releases out of the UK as Brexit uncertainties intensify. The week starts off Monday with Sweden's CPI for December, as well as Euro area industrial production for November. Industrial production in Europe inched up a bit in October from the prior month and ticked up 1.2% over the prior year, with the increases mainly attributed to capital goods, as well as to a rise in Lithuanian activity. However, a fall in energy production has hampered healthier numbers. On Tuesday, investors will get Turkey's unemployment rate for October after rising to 11.4% in the previous month, as well as Germany's full-year GDP growth for 2018 and the euro area's trade balance for November. Market also expects a vote on Theresa May's Brexit deal in the UK Parliament on Tuesday, following a contentious delay in December. Among other issues, the deal has been caught up in the House of Commons amid a large wave of Conservative opposition. There have also been calls by Labour leaders for a second referendum, as well as a general election. UK is scheduled to leave the EU on March 29th. Meanwhile, a slew of economic reports will be released midweek by the UK, including producer, retail, and consumer prices. UK CPIs rose slightly in November from the previous month, mostly on the back of a lift in alcohol and tobacco prices. However, the index was largely dragged down by lower petrol costs. Also Wednesday, Germany will provide its inflation rate for December, and Turkey's central bank is set to announce its interest rate decision. Looking at the latter part of the week, investors Thursday will receive Dutch unemployment numbers, German wholesalers' prices, Italian trade figures, as well as euro area construction activity and CPI. Market participants have been keeping an eye on inflation in Europe after the pace slowed in November to just under 2%. Meanwhile, ahead of the weekend, Russia will unveil its trade balance for November, and the UK will provide an update on retail sales. British retailers suffered the worst December sales performance in 10 years, this according to the British Retail Consortium. BRC Chief Executive Helen Dickinson said that with the looming threat of a no-deal Brexit, the retail landscape in the UK is changing dramatically. This as companies generally wrestle with mounting costs from government policies, higher wage costs, and rising business rates. Dickinson added that while retail comprises 5% of the economy, it pays 10% of all business taxes and 25% of all business rates, which she sees as neither fair nor sustainable. In the meantime, select the event calendar option in the IBKR Trader Workstation for a full list of US and global corporate events and earnings, dividend schedules, economic data, IPOs, and more. I'm Steven Levine for Interactive Brokers, asking you to enjoy the week ahead.